The crypto market was really missing a regulated bank. And while that seems obvious now, it wasn't as obvious back in the days, right? There are no crypto native core banking systems around, right? So we had to work with what was available at the time and try to figure out how you can fit a digital asset into a core banking system. When you have an idea as a portfolio manager, you want to launch a new product, you can do that within a few weeks and you're ready, including your account at Sygnum, including everything you need from GenTwo.
This is the Assetizer podcast.
Hello everybody and welcome. My name is Tom Lyons and this is the Assetizer podcast, and today I'm sitting with Dominic Lohberger, who is the Chief Product Officer of Sygnum Bank here in Switzerland, and Sygnum is the world's first regulated crypto bank, right? And it's been around since 2019, I believe.
Yep.
And we're here to talk digital assets, we're here to talk the TradFi DeFi, we're here to talk innovation and a lot of very interesting things that you guys are doing. So Dominic, welcome.
Absolutely, thanks for having me, Tom.
Thanks for coming. So before we get started into all that fun stuff, maybe you can tell us a little bit about yourself. You come from a traditional finance background, right?
I do, yes. I think we could say that. So academically, my background is kind of at the intersection of data science and finance. I've been with Credit Suisse for a while in trading, in various different roles in and around derivatives. Then went down the rabbit hole, if you will, of crypto, like many do. From the Credit Suisse trading floor, joined crypto finance in 2017. And then
that was the year to do it.
Yeah, exactly. Yes, that was pretty much the year to do it. And then 1.5 years after that, in the early days of Sygnum, joined the firm initially as the head of trading, built that business over the last 5 years, and since the beginning of this year, I'm Chief Product Officer at Sygnum.
Okay. So as we were talking about before, when we were preparing, I'm very keen on getting some insights into how Sygnum got started. So I used to run communications at the Crypto Valley Association. So I worked with Luca, your founder, a little bit, and I remember those days were very heady days, a lot going on. But what was the impetus to say, okay, we're going to start a crypto bank? And how'd y'all get together? And I'm really curious on what went well and maybe what was a bit of the challenges there.
Mm-hmm. Yeah, I guess the hypothesis of the founders at the time, and that was even earlier, back in 2017, was that the crypto market was really missing a regulated bank. And while that seems obvious now, it wasn't as obvious back in the days, right? It was a time when there was a bit more wild west than we have it today in crypto markets.
That's an understatement.
They recognized that need relatively early on, and then basically went for it and decided to build a bank here in Switzerland, which is not a small undertaking. You go through quite a rigorous process when you want to get that banking license, and that's also the time when I joined, early 2019, when we were in the process of applying for that banking license, of preparing ourselves for when we would get that banking license, and ultimately also hiring the people that would then have to run that business and would have to make money. And it was an interesting time. I mean, we were at Trust Square. You might remember it was a co-working space for blockchain companies.
Yeah, I had an office there as well.
Yeah, opposite of the Swiss National Bank in Bahnhofstrasse. So definitely a very interesting place and time. We went through that process. You ask yourself a lot of fundamental questions when you start from a green field and you try to build a bank within probably less than a year, which is not a lot of time for something like that, especially in a market where there's not a lot of precedence for what we were trying to do. So obviously FINMA had, and rightfully so, a lot of questions around our AML KYC setup, for example, in the context of crypto. So we were the world's first crypto bank to ever get a license in a tier 1 jurisdiction. So also for FINMA, I think it was a novelty, which was a very interesting process to go through, for sure.
I'm sure it was a novelty, but I have the sense, and correct me if I'm wrong, that by 2019, FINMA kind of understood digital assets. At least they weren't coming from zero, right?
No, absolutely
by
not.
Sense. So what were those conversations like?
Well, I think it was a very constructive dialogue. Ultimately, you need to find solutions together. I mean, you have proven concepts from traditional finance, and they generally apply to digital assets as well, right? Especially in the context of AML KYC, where many of the topics are similar, but they're based on a different technology. So, but yeah, ever since then, and by the way, that is not just in the context of the licensing process. The exchange with the Swiss regulator is really exceptional. I think many banks would envy us for the exchange and the dialogue and the proactivity, the progressiveness that the Swiss regulator has in that regard. Yeah.
Dominic, maybe we can pick up on that theme of you know, I wouldn't necessarily say clash, but this meeting of two different worlds, right? Which, you know, you, myself, a lot of people, we also had that evolution, right? We came from a traditional background. I used to work at UBS, and all of a sudden you're in this brave new world. But there's two different cultures coming together. So what's your experience there in the sense of not just culturally, but in terms of the products, in terms of the setups? What's the same? What's different? What did you have to sort of mold together?
Mm-hmm. I mean, we had to mold together a lot of traditional technology that we were bound by. So I'll give you one example. When you build a bank, one of the most fundamental pieces of infrastructure you need is a core banking system.
Right.
And there are no crypto-native core banking systems around, right? It's generally not, you know, a very exciting product as such. It's a necessity for a bank, right, to have that and that traditional ledger. And so we had to work with what was available at the time, and yeah, we selected one among many different providers that were claiming to be ready for this digital asset revolution, if you will. And that's something where you really need to experiment on the fly sometimes as well, and try to figure out how you can fit a digital asset into a core banking system. So one very practical example, for example, is that in traditional markets, there is no such concept as trading one security directly against another security. So you would never find a direct trading pair of Apple shares against Microsoft shares. It's Apple against US dollar, right? And it's Microsoft shares against US dollars. Now in crypto, the concept of two securities, quote unquote securities, being traded against each other exists. So you have that ETH Bitcoin trading pair on exchanges, right?
Buy one token with the other token.
Exactly. You can directly go into from one to the other without ever having to hop into an asset in between. And so that's a very practical example of something that fundamentally doesn't exist in traditional markets, but we had to work around to make it work in crypto. Yeah.
So is the workaround to put something in the middle, or?
Yeah, you can hop via US dollars, for example, as a kind of an artificial trade in between, and balance it that way.
And I would imagine that another huge point of difference is custody of the assets.
For sure. I mean, the whole security aspect of custody is very different, right? If in traditional markets a bank gets hacked and funds get transferred away, there is a certain likelihood, depending obviously on how it happens, that they can be recovered. Depending on where they're being sent to, they can be wired back and so on. There's no guarantee for that, but there's a possibility. In digital assets, per definition, if you don't have access to the private key of the address, the wallet that the funds have been sent to, they're lost. They're lost forever, right? So it's a very different game that we're playing here, and security is at the forefront of everything that we have to consider here. Yeah.
Do you guys custody yourselves? Did you build your own?
So we are
system?
working. Yeah, so we have gone through different evolutions of custody setups over time. So you might remember then, since you've been in the industry for a while, that we had a partnership initially, a joint venture with Swisscom and Six to build Custodigit.
Mm-hmm.
Custodigit was initially the custody technology provider for our solution. Over time, we then moved to a multi-custody setup, which we still have today, where the big part of our assets are held with Fireblocks now.
Okay.
Yeah.
Okay. All right. So you said before that there's certain concepts that are slightly different, like the atomic swap thing that you can't do. What else is in terms of on the product side maybe that is different in the crypto world than you would find in the traditional world?
So there are different products entirely, products that don't make sense to have in a traditional market, but make very much sense to have in the crypto market. They evolved as a necessity from the market structure that was kind of organically, that grew organically in the crypto market. So one example, and we will probably talk a bit later about that as well, is our product called Sygnum Protect. So in crypto markets, you can trade directly on exchanges, and that's a very unique feature. That's something that doesn't exist in traditional markets. So
as an investor, as an individual person,
exactly.
That's the whole idea of them.
Exactly, that's the whole purpose of it, if you will. I agree. Now, while that's great, it comes also with certain risks, right? Your exchange typically acts as a custodian of your funds, at least for the time that you hold your assets there and you want to trade them, right? You want to have them available and ready to sell. And during that time, the exchange is the custodian. Now, one might argue that we should advocate for what I typically call kind of the separation of state and church, in that an exchange is a market venue and a marketplace and not a custodian.
Right.
And I think it took us almost 10 years into this industry to realize that might be one of the biggest risks we have systemically in the industry. I mean, definitely after FTX, after Bybit earlier this year, right? I think these were stark reminders that exchanges should not be custodians fundamentally. And it's very much around this premise that we've built Sygnum Protect, which is an off-exchange custody solution. So in simple terms, you hold your assets with Sygnum, a regulated bank, and you get a mirrored one-to-one on the exchange.
Yeah, that makes sense. Okay.
So you can trade your assets there at any time. So the exchange remains the marketplace, which is definitely what their strength is, and then we are the custodian, and that combines the best of both.
But then, do you take the risk, the exchange risk in that case? If you
No, I mean
you
the
said,
exchange
sorry,
risk.
the assets are mirrored. So who's
Yeah, but so the way it works is that say you hold. Let's make a practical example. Say you hold $1 million in, and typically its clients hold UST bills in as collateral because it's a yielding asset. So that generally makes sense to do that. Say they hold $1 million in UST bills with Sygnum. The exchange, so Binance, for example, that we're working with, requests via API the balance of that particular end client, and sees, okay, that end client has $1 million in UST bills there.
Okay.
So credits the client $1 million in virtual margin, if you will.
The exchange credits the...
Exactly.
Okay.
And then there's a whole process around settlement, obviously, and so on. And that's how you ensure that the funds remain safe at the Swiss bank while being tradable at the exchange.
Cool.
Yeah.
Okay.
Yeah.
Dominic, another thing I'd like to talk about, obviously since we're here at GenTwo, is we recently announced a partnership between GenTwo and Sygnum, and maybe you can take us a bit about what that is and how it came about.
Mm-hmm. Yes. So let me start with how it came about. It came about, I think, in a way that many good ideas come about during a lunch between Philip and me.
Philip's our CEO of GenTwo.
Exactly, between Philip Nagli and me, where we were brainstorming around ideas around how we could kind of improve the biggest pain points that AMC portfolio managers typically have, especially in a crypto context. And we realized a few pain points. So one of them is the fact that you can typically not subscribe in kind. So say you have you have one Bitcoin and you want to invest into a digital asset, AMC, a crypto product. Now, typically what you need to do now, or had to do until now, was to sell that Bitcoin, say, into dollars or Swiss francs, to then subscribe to the product. So you kind of lost that market exposure during the subscription period. And that's obviously not ideal. So what we now allow for is, through Sygnum, you can directly subscribe in crypto. So you basically send that Bitcoin to the account of the AMC at Sygnum, and you never lose your exposure in between, right? And also it reduces cost because the manager of the AMC doesn't have to reinvest the Swiss francs or dollars that they get into the actual underlying asset of the product. So it's a great additional benefit as well. So that's one pain point we realized, the in-kind subscriptions. And then another one is what I just mentioned around Sygnum Protect. So many clients, they run sophisticated derivative strategies as part of their AMC products, right? And for them, doing that with all the funds, and that's ultimately investor money, right? Investor money being held on exchange, fully exposed to the exchange risk, was really not sustainable, and it was also not particularly attractive for the product. So it was shying away investors, and we solved that through Sygnum Protect. That's what I mentioned before. And then, of course, since we have now set up that partnership, and we have gone through and tested that onboarding process of a new product. So we know when you have an idea as a portfolio manager, you want to launch a new product, you can do that within a few weeks, and you're ready, including your account at Sygnum, including everything you need from GenTwo.
Yeah, maybe you can take us through that process. So let's say I'm an asset manager, and I want to use this particular platform and this product. What's my experience going to be like?
So, well, you start with GenTwo, and you basically say, look, I would like to create say an AMC, any kind of product.
On a crypto strategy.
Exactly.
Of some kind, yeah.
Some crypto strategy. You select Sygnum as a custodian for the underlying assets. We open a bank account for that AMC. That's the part that happens now very quickly because we've battle tested it, if you will. And then you're ready to receive subscriptions. So you can go out and basically get subscriptions and fund and seed the product, right? Once it's seeded, you can start investing with the strategy. So say you're running that strategy on an exchange, as I mentioned before, so you can deploy your assets into Sygnum Protect. They get mirrored on the exchange, and then you can start trading there and receiving additional subscriptions, managing the product, etc. So it's very convenient. Yeah.
Can I also trade over Sygnum?
Yes, you could. Yes, it's a good question. Yes, you can also trade over Sygnum. We have a crypto spot trading desk. We have access to all traditional markets instruments. By the way, that's an interesting topic as well. I think if you would have asked Sygnum in the very early days, you would have asked us around our traditional securities, traditional markets, so equities, bonds, etc. offering, I think we would have said that's not really what we want to go into. We wouldn't want to dilute our value proposition. We really want to be perceived as a crypto a bank and not as a private bank offering a bit of crypto on top. I think that perception has evolved over time, also with the market evolving, and we've really also realized that also for crypto players, it's important to have access to traditional markets, and we can act as that bridge in between. And there's no point in being too kind of say religious about or too fundamentalist about that approach. Yeah.
Okay, but let's pick that up because I know what you're talking about. So I got involved in 2016, 2017, and I was obviously came from the traditional banking side, communications and marketing, and back then, it was all decentralization. It was there was certainly a large amount of replacing the banks and all that. Although already, I got involved because I was doing some thought leader stuff for UBS. I wrote this blockchain white paper and all this other stuff. So it was already the traditional world taking a look at this. But there was much more this idea of, or there was a whole faction that's like, we're going to do everything separately and we're going to decentralize all the things. And there must have been a bit of that also with you guys, even though you're trying to make a regulated bank and everything like that. There must have been a bit of that at the beginning. And it seems like fast forward to today, and that's very, very different. The walls seem to be crumbling. Would you agree?
Well, I agree that when you look at it superficially, you might argue that a bank in digital assets is a contradiction in itself, right? Because you're kind of operating the middleman that the whole kind of ideology was supposed to get rid of, if you will. But I think that's a very superficial view on it, because ultimately while that might be true for some individuals that really believe in the technology and want to and are capable also and have the tech savviness to interact with the blockchain and self-custodize and do it all themselves, that's great for them. But there are many institutions out there. There are people managing other people's money that need to rely on a regulated institution to actually take care of that of these processes, right? To understand, look, my assets are safe here. They have undergone all of these strict processes, and they know how to deal with that. And I don't have to worry about custody setups and trading on different exchanges and different counterparty risks, etc. All of that gets taken care of. I can just focus on my investment strategy. So, I believe that perception has changed, especially with institutional demand coming into the space. Yeah.
I mean, that's also been my personal evolution, and I've been asking people. I mean, I had Mark Arasaratnam, our head of GenTwo Digital, on the podcast. And to me, the I don't know if it's the weak link or the problem with decentralization is I'm not sure everybody wants it. I'm not sure I want it. It's exactly what you were saying, right? Because it's a lot of responsibility with it, a lot of work with it, and it's kind of nice to have intermediaries. They're there for a person. I remember even back in 2017 and 2018 when I was working at Consensus, Joe Lubin would say, look, it's not about disintermediating everything. It's about right-sizing intermediation.
Correct.
In a sense.
And I believe there will always be a market and the world out there for those that want full decentralization, and they can make use of that. No one's in the we're not objecting that as such, right? It's not that we see that as competition. I think both worlds can live very well alongside each other.
One thing we haven't talked about is Sygnum Connect. So you've talked about Sygnum Protect, which is actually quite interesting.
Yeah.
What is Sygnum Connect, and how does it fit into this?
Yeah. Connect is Connect is a 24/7 settlement network that we've built within the bank. So what it allows you to do is to send digital assets or fiat assets as well from your account at Sygnum to any other account at Sygnum, any other client's account at Sygnum, 24/7 instantaneously without ever having to go through the blockchain. So in simple terms, it's just an entry in our core banking system, in our ledger, -1 on this side, +1 on the other client side, right? So it's a very simple operation, but it unlocks a number of different possibilities. And one of them is actually this in-kind subscription that I talked about before. So when you send 1 Bitcoin from your account to the account of the AMC instantaneously, 24/7, you can basically trigger the subscription process to a product through that, right? It also allows many other things to be done. So if you're a market maker and you, or an OTC liquidity provider, you're trading with your clients and you need to settle at the end of the day, then it's very convenient to settle your assets into one direction, the client sends their assets into the other direction, can all be automated via Sygnum Connect. So it's one other puzzle piece to this whole offering that we have to the market. Yeah.
I do have to ask you, I mean, you've been in this space for a while, I've been in this space for a while. There have been ups and there have been downs, certainly on the cryptocurrency side. Did you ever over this time, have any doubts in the asset class, or thinking to yourself, oh boy, what have I gotten myself into?
No, I wouldn't say I had doubts as to whether we were on the right track as far as the industry goes. Definitely not. I think it's natural that you go through cycles of, in extreme terms, say euphoria and terror, along with the market, but also along with the entrepreneurial journey. I would say it's part of the journey. It's part of sticking along while it's difficult is part of what it takes to make it, I think. And so I don't think we have ever had doubts in whether we are in the right industry. Of course, you have moments where you think, should we have taken a different path? Should we have done that instead of that? But that's normal, and I think it's part of the story, part of growing and learning. Yeah.
So what made you a believer in digital assets and Bitcoin and Ether and all that at the beginning? Like, what was the attraction?
So I stumbled across it being, on the trading floor, working very much in TradFi, and kind of what interested me was really more I think I took a much more libertarian approach at that time than I might have now. It was really the idea of being completely self-sufficient, independent, having no one's able to take anything away from me if I don't want to, which I think we're living now in times where this is more important than ever before, this whole idea.
Yeah.
And I think that's what initially drew me towards that industry, but it has evolved over time. And of course, for me, trading is a big passion. It's what I've been doing most of my career, and being able to do that in and around the new technology that I like is beautiful. Yeah.
So one other thing I'd love to talk about is where we are right now, and over time, I've certainly seen a lot of cycles of. I've seen a lot of mainstreaming moments, right? This is it. This is the year that this was mainstream. This is the year, and it's been a lot of years, and it didn't, and it didn't. And I've been through a couple of, this time it's different situations. But actually, right now, and I'm almost scared to say this and have it recorded. This time does feel slightly different. There's so many major players in crypto now. There's obviously big regulatory change of heart in the U.S. We have, we've always had more or less regulatory certainty in Switzerland for a while, but now we have MiCA in Europe, Asia. So, yeah, let me ask you this: is it different? Are we there now?
It's a good question, and as you say, I mean, if you've been in the industry for a while, you will have heard the institutions are coming. A term for probably quite a few years now. But I'm with you in the sense that it does feel different. It does feel different now, and I believe what really kickstarted was the change in the administration in the U.S. Not necessarily only because of the way that they pushed digital assets actively into their agenda, but also the fact that many institutions no longer need to fear at least the same level of repercussions if they're active in digital assets as they had before. And that, I believe, has unlocked a lot of kind of potential. I believe there were a lot of business plans to go into digital assets among traditional financial institutions ready in the drawer that have been picked out last November, December, January, and have been looked at again and are now being worked on.
Yeah. I know that's true because I was also at the Enterprise Ethereum Alliance for 2 years doing the comms there, and so we work with all the big enterprises, and everybody had something in the drawer. They're just like, the time isn't right, but they understood blockchain, they understood crypto, and they're just like, and they're also kind of waiting for one big one to go over the wall first. Yeah. And I guess that would have been BlackRock.
I guess, yeah. I mean, BlackRock was definitely early for sure. There were others as well that were sort of breaking the ice, but yeah, I think what really broke where the wall was being torn down was really when the U.S. opened up to that, and you know how it is. If you're a regulated bank, you need to have access to the dollar clearing system, for example. You cannot afford to not have access to that, right? And so as long as that threat is in kind of the back of your mind, you will not venture into new business lines such as digital assets, right? Even if it could be profitable, it's not worth it.
So where do we go from here?
Well, with many different fronts. I believe one of the fronts that has recently, or over the last 2 to 3 years, shown a lot of promise is basically the whole idea of tokenization of money. Tokenization of money in the sense of the stablecoin industry, exactly, but also tokenized money market funds, so short-term liquidity instruments, which are an important kind of cornerstone of liquidity management, treasury management at the end of the day. So that is, we've recently seen the IPO of Circle, hugely successful even after the IPO. So I believe that has over the last 2 to 3 years been one of the most promising venues. I believe where we still need to find the path forward is on DeFi. I believe on many, since the DeFi summer 2021, 2022, we have really not seen all that much additional traction on that front. And I believe it's still an open question how we can merge DeFi into the traditional financial world? That is an open question to be solved. But yeah, I'm very promising. I think we're doing very promising steps forward also in terms of tokenizing other traditional financial instruments, so debt, equities. I believe that market is moving forward very quickly with a lot of initiatives going on in the background. And I also feel that in the next 2 to 3 years, if you are a bank, you will no longer be able to resist offering digital assets to your end clients.
So Dominic, one thing, what you just said got me thinking about is, to what extent does, or could potentially this sort of mainstreaming moment or really big adoption moment of cryptocurrencies also really push or pull adoption of blockchain technology more generally? I don't mean just for crypto, but for for other blockchain is theoretically a banking rail, right? Or it's also got a lot of non-currency use cases in supply chain and in pretty much everything. So the coins have always kind of pulled the technology, but do you think we're going to see more of that now?
I think it very much depends on the specific use case of the blockchain that we're talking about. Blockchain as the fundamental ledger for all banking transactions, I believe, if ever, is decades away. Just by the sheer speed that regulated institutions can move towards new technology in the most fundamental areas of their infrastructure, right? That I think will limit that adoption for sure. My hypothesis is there will for a while live the DeFi world where you can do, you can interact with DEXs, you can with decentralized options vaults and all kinds of interesting technology that will live alongside the traditional financial world for quite a while longer. Now, in other areas, as you mentioned, supply chain, etc., it's very interesting. However, in my view, blockchain still has to prove that it is superior to a traditional database and a traditional ledger in many different areas. I think we all live in this bubble where we sometimes are surrounded by people that are advocates of this technology, and rightfully so. But that doesn't mean it's the right solution for everything. It's the right solution for a few specific problems, and some we have identified, such as tokenization. Others we still have to find. Yeah.
All right. Well, that was a great talk. Thanks a lot, Dominic, for coming.
Thank you, Tom.
Pleasure.
Yeah, it was a pleasure. Thank you.